For the stock market review today, I wanted to break down the inflation data numbers that we got. I've got some charts to show you there and to show how that will affect the stock market and the bond market. We didn't see a huge move, but we did see some movement in both stocks and bonds. Further, for the stock market review for today, I want to take a look at oil prices. Oil is starting to sell off. So is gold. Gold just hit an all-time high, about a week ago? All of a sudden, it's sliding pretty quickly. This is because, and in both cases, it's affected by the bond yields. If inflation remains sticky, bond yields will remain higher. Gold and oil will continue to sell off. Eventually, this will turn into a potential sell-off for the stock market. Let's take a look at the stock market review, and I'll break down all these charts for you. If you're finding my channel for the first time, thanks so much. What I'm trying to do is a daily stock market review. And here I'm showing the headline inflation and the core rate inflation. They move pretty close to each other. If you look at the bottom right corner there, it's the previous 4 months actual number, and this is the core inflation rate. Now, the Federal Reserve itself doesn't pay attention to CPI, Consumer Price Index. They pay attention to the PCE. It's the same thing, just slightly different. The PCE is a little more sensitive. Now, 4.43, 4.14, 4.03, 4.007. Slowly trickling lower and lower, that core rate. A big chunk of that is housing, the cost of housing. Housing is upside down when it comes to supply and demand. So I expect that housing will be a thorn in the side for everything going on. Interest rates are going to remain higher for longer. Inflation will remain sticky. What needs to happen is home builders need to just dump a ton of supply into the U.S. economy. They have not been doing that. Home builders are about 5 million units behind over the course of, say, the past 10 to 15 years. That's huge. Because of that, because of the inflation, interest rates being near zero for certain periods of time after 2020, when the Federal Reserve dropped interest rates as much as they did because of COVID to keep the economy moving forward, everybody rushed into real estate because your mortgage rates were 3%. What didn't happen was home builders speed up and start building more and more homes. So that portion of inflation is going to remain sticky. How do you fix that? You leave interest rates higher for longer, really long, and you probably push interest rates higher. We'll see how that plays out. I do not expect the 2% rate that the Federal Reserve is looking for to magically just happen based on where we are with the current rate. I always start off with the fact that, or the sort of bullet point, the Federal Reserve didn't get it right. They never do. We're not there right now. 2% magically? Don't think so. Here's a look at the 4-hour bar chart for the U.S. 10-year Treasury. Now, we saw a move lower in yield overnight. Then we saw a big spike up, a small spike up in yield after the data point. Wasn't a huge move, but I believe that the 10-year is likely contained right at where we're looking. We'll probably see the 10-year trickle back up, getting close to 4.3, probably hang out between, say, 4.25 and 4.4 for some period of time. The stock market really won't get too affected by that much, as long as stock players believe that eventually there will be a move. Now, here what we're looking at, this is actually TLT stock. TLT is the Treasury Bond ETF, and I trade this one often. I'm actually long puts on some TLT and a couple others. I kind of made a basket going into last Friday's non-farm payrolls numbers, and that worked out pretty well. I'm profitable, but I'm really waiting for tomorrow to see what the Federal Reserve says, and my thinking tomorrow is that the Federal Reserve is going to say interest rates are at a level that are restrictive enough inflation is still there. Basically, status quo, no real changes. Because of that, I expect that TLT stock, which we're looking at right here, will probably move downward a little bit. Next, we got, this is the S&P 500 index, and as you can see, it was actually initially we saw a spike upward, then we saw a spike downward, then we pushed right back upward again. Still about 30 minutes left in the trading day, and I don't expect much to change after that. The stock market just sort of took it in stride. Stocks, broadly speaking, when you're looking at the U.S. 10-year Treasury yield at 4.21%, which is current, stocks are overvalued, that they need to come downward relative to the benchmark 10-year Treasury. A lot of these companies, if you look at the next 4 quarters, their forward PE, if you will. If you look at their next 4 quarters, you add that up and divide that over the current stock price, some of these companies are yielding 3%. The 10-year's at 4.2%. Why would you get involved in something that's 3% when the 10-year will lock in 4.2% with nearly zero risk? Here's the SPY stock ETF. Again, it's a sort of it's the ETF on the S&P 500. I'm looking to start buying puts on this. I want to find out what the Federal Reserve says tomorrow, because I think there's a possibility that the S&P 500 and SPY stock itself, the ETF on the S&P 500, moves lower. Moving forward, oil. And as I mentioned, oil has been selling off. As interest rates move higher, we're seeing a contraction in the economy. We've seen some unemployment move higher. Demand is lower than supply. Price needs to go down. Classic economics move. This was kind of a decent sized move downward for oil prices. I actually just did a video on this. Make sure to hit the button for that. I'll put a link in the description below for this particular stock where I break down the oil energy sector, USO stock, which is the ETF on that, and XLE stock, which of course is the energy sector ETF, if you're looking to see, to play the downside moves there. Gold spiked up, triggered some stop losses. Then someone came right back in, and gold prices have been moving lower. If interest rates continue higher, gold will continue to be pressured. I thought that we were probably close to a high. Certainly didn't call it with that big spike upward to the all-time high for gold. Nonetheless, starting to move back downward. U.S. dollar index starting to get a little lofty again. Will the dollar move higher if interest rates continue to remain higher? Yes, they would. This will affect stocks because many of these multinational companies get their profits overseas, then have to bring them in. If the dollar's rich, that makes those companies poorer. Finally, wanted to take a look at volatility. This is the kind of move I'm looking for. I'm waiting for tomorrow, again, the Federal Reserve, before I make a play. This is UVXY stock. What I end up doing on something like this, and I just put a video up on the VIX this morning. Make sure to take a look at that as well. I'm going to be selling puts on this with the attitude that we're probably going to moderate, kind of move sideways, but we might be seeing the bottom of this move lower in volatility. We'll see, though. Let's find out what the Federal Reserve says tomorrow in their meeting. Nonetheless, this is your stock market review for today. I try and break down the stock market on a regular basis, and I'm going to do this kind of format. I've been trying to do this, and it's been well received by the followers. This is a new channel. I broke it out from my original channel, Cannabis Stocks Analysis, and this channel is growing quite nicely. Thanks so much for the likes and comments. Make sure to hit the follow button if you're just finding me. We'll see you in the next video.